Well, hello and happy Monday to all of you. Steven Sitkowski here. Welcome to this week's edition of my Market Insights. Hope everybody is doing amazingly well. Markets are off to a much better start this week. So we'll talk about that and a whole bunch more. Um, First of all, I want you to know that everything that we do here is for educational purposes only. It is not intended as investment advice. I'm just sharing with you based on 45 years of experience of watching the financial markets go round and round, the good times and the bad. So, what's moving the markets? Well, tariff quote unquote flexibility gives markets a boost. So, we're supposed to have these universal tariffs imposed April the 2nd. The president has said that there might be some flexibility in this. I've been saying right along that the tariffs, for good or for bad, this isn't a judgment, are being used as a negotiation tool. And it's like, if you don't do this, we're going to hit you with this tariff. And then I saw a new threat this morning. If you buy oil from Venezuela, 25% tariff. So it's like 25% tariff for you and for you and for you. But he came out and said, hey, there could be some flexibility to this deadline. And you know, the markets are always looking forward. So it's almost like talking to a child. If you tell a kid, we might be going to Disneyland, in their mind, they're going to Disneyland. If you tell the markets, hey, listen, we might not be imposing tariffs, then the markets go, oh, then we're not going to have worldwide trade wars. The economy is not going to slow the way that we were feared, and life is good, and the markets move higher. So, it's really interesting. For 2 years, I've watched these markets being driven by the Fed, and now they're being driven by the administration and talk of tariffs. Services sector was stronger than expected in March. I'll show you that print here in a moment. Tesla's been down 9 consecutive weeks. I mean, it has taken a beating. And, of course, the question is, at what point would it be appropriate to maybe enter a bullish trade? I actually did a bullish trade on Tesla last week that worked out. It was a spread trade, so I gave myself some room to the downside. Is the worst out of Tesla? Have we seen the worst news? I would think we got to be getting close. That is my sense of things. And, my other sense of things is that I think that Elon Musk will figure it out. There are just certain people that have that ability. They're just, higher IQ than the rest of us. And I remember when Facebook transitioned to Meta, stock fell 70%. And again, I simply bet on the fact that Zuckerberg would figure it out, and that bet made me a whole lot of money. 10-year Treasury is up. Why? Because the chatter of trade wars is down, right? Those two things go together, and oil prices have moved up a bit. Now it's 68.35 a barrel. If you remember, it was down to 65-ish. What to watch for this week? Let me pull up our economic calendar, shall we? I'll show you how we get to it. Economic news this week brings up Market Watch. And here we have it. So for today, we had the Services Purchasing Managers Index come out, and it beat the forecast and it beat last month's print. So we were at 51, now we're at 54.3. Anything above 50 is expansion. Then we had the manufacturing number come out last month, 52.7. It was down a bit, 49.8. So kind of hovering between expansion and contraction. I know this is a primary target of these tariffs is to get manufacturing back home. On Tuesday, consumer confidence number comes out. It's expected to fall. New home sales are expected to go up. Real estate's been selling. I think it's probably due to seasonality. Nothing that I think is going to move the markets on Wednesday. On Thursday, we have initial jobless claims. We're expecting 226,000 up from 223. That's unremarkable. GDP is supposed to come in at 2.3% for the fourth quarter. That's an important number. Let us know whether or not we're headed towards a recession. 2.3 is strong. Um, we have pending home sales. That's not going to move the market on Friday. Friday's a big day. Personal income expected to go up 0.4%. Month over month, personal spending is supposed to go up 0.6% after falling 0.2. PCE, personal consumption expenditure, up 0.3. Year over year, 2.5. That's reasonable. The Fed's target, of course, is 2%. Looks like core PC is expected to tick up 0.1 from 2.6 to 2.7, and consumer sentiment holding steady at 57.9, which doesn't show a whole lot of sentiment, a whole lot of confidence. So that's what we're looking at for this week. All right. This is last week's. Let me do this. This is last week's heat map. We see definitely more green than red, the bright green. This doesn't make sense. Hang on. That's got to be old. Let me try this again. Let me pull this up live for us. And there's your 1 week performance. No, that was correct. So, because of today's move, Tesla's a big winner. Um, at 271. Let me look at something here. Yeah, there's the chart on Tesla. Very good. So it is finally starting to rebound. That's nice. Boy, that's cost Elon a whole lot of money. No doubt about that. All right, so that's the 1 week chart. Um, like I said, more green than red, and I don't see a lot of bright colors popping, big moves. I've seen some in the utility sector, energy sector, financials, consumer defensive. So it looks like there's money being rotated out of the defensive stocks into more aggressive stocks. More on that in a minute. Here's a 1 year heat map. It's just so weird to look over here and see NVIDIA up 33% for the year. I'm accustomed to seeing 100 to 200% before its pullback. But there's a lot of money to be made. That is for sure. Walmart 41%, Tesla 54, most of that happening after the election. Um, T-Mobile 59, Netflix 52. So yeah, not bad. Market sentiment up a bit, but still way below historical averages. Historically, 37.5% of independent investors surveyed expect the market's going to go higher over the next 6 months. We're at 21.6. We've been down around 19 for the previous 3 weeks. Bearishness has gone from 31 to 30 to 58. So people are still very skeptical. I'm not. I have full confidence in this market. May take a while to shake out. All right, what's Fed going to do? This is latest and greatest. This is live. Um, 89, let's call it a 90% chance in May, no rate cut. And then there's a 68% chance that we'll get our first rate cut in June. And then the next one in September. And then we're expecting one in December. So one, two, three rate cuts would really boost this market, in my opinion. That's off a little bit. And let's look at sector returns. So this is year to date. Okay. So definitely we'll look at the last week as well. So energy, which was near the bottom, has moved near the top. You've heard me say over and over again that energy was a pretty attractive place to just hang out. With oil in the 60s and energy stocks paying a dividend, good candidates for covered calls. So energy is up. By the way, the S&P, this is for the year, is down 2.22%. We're almost back to even. So the winners, energy, healthcare, utilities, all the defensive, financials, materials, REITs, industrials, consumer staples. Those are your winners. Communications, kind of a push. The only two big losers are technology and discretionary. I'm going to look for the last 5 days. Interesting. What's at the top? Discretionary. So for the last 5 days, market's up 1.34%. Energy. So energy starts continuing. Financials. I like both of those a lot for conservative plays. All right, let's take a look at the charts. Here we go. Pull up the SPX. We are trying to recover, trying to get back to that 50-day moving average. I mean, we're heading in the right direction, almost a V-shaped recovery down here. So, can we say we're in a nice bullish market? No, not at the moment. If you look at this 50-day, it's still rolled over, but it looks like the MACD is getting ready to turn green. We were, according to the RSI, in oversold territory, and that's starting to rebound on balance. Volume has started to recover. So at the moment, but this market's not being driven by technical analysis. This market is being driven by tariff talk. And that, my friends, is what you need to keep an eye on. All right, I will be back with you next week. I hope you have an amazing week. Hopefully, we can keep the momentum going in the market, but we'll see. The market's going to do what the market's going to do. Our job is to respond appropriately. All right, till next time, be safe, be blessed. Bye.